So there's numerous factors that have been driving performance, but really it's value stocks have been well bid over the last quarter. Now there's a couple of reasons for that. Predominantly it's been a rise in interest rate expectations and inflation expectations, which have happened over the last quarter, with most of the market kind of poised with a higher probability that the Fed is going to raise rates in December. That has majorly benefited financials, so they're going to benefit from a steepening yield curve. It's going to improve their net interest margins. Financials ever since January, February have been incredibly under-owned and cheap, so that sector has actually benefited quite a lot over the last quarter. Another thing that is a benefit is really just kind of old world economy kind of stocks, so materials, industrials. When you look at it, the overall index had just gotten really expensive. So when you're looking at a price earnings multiple on the S&P of kind of low 20s, kind of markets are trending sideways, but the overall index looks very expensive. Market investors will tend to look for opportunities to pick up cheap value stocks, and really that's where value has resided, is kind of in those industrials and materials names. So they've actually seen quite a big pickup. Yes, I do. I think we've been waiting for the value trend to reassert itself, and it definitely has lagged over the last couple of years. And I think the right kind of catalysts now are in place for value to start outperforming over, say, the next quarter or two. Probably one of the biggest things that's happened is just with the election of Donald Trump as president and the kinds of policies and initiatives he's going to begin in the U.S. economy. It's very supportive for actually value names. So, a focus on old world kind of manufacturing type names, protectionist policies that should support mid-cap and small-cap kind of U.S. names, lowering of corporate tax rates, which should provide a tailwind for all U.S. corporate names. These are all things that are going to support kind of cheaper value, old world type economies, which a lot of value names reside in that kind of in those sectors. Similarly, it's probably going to create a headwind for a lot of the mega cap tech and growth names. So the thing that people are most worried about, especially in those spheres, is with all the protectionist policies and kind of tariffs that are going to be built up, are you going to see a quid pro quo in terms of our iPhone's going to suddenly be tariffed in China if Trump starts raising tariffs for Chinese kind of goods. So that kind of fear is definitely out there. Repatriation of offshore money held by a lot of these companies such as Apple and Google will create a cash outflow basically for them, potentially just a one-time only, but definitely it'll be a drag on their earnings. So these kind of things have set up so that value, the kinds of companies that I'm thinking about are definitely industrials, materials, financials should outperform larger cap, mega cap growth names such as some of the tech names that we see.